This is Mr. Shoki. If you're watching this, you're definitely at the right place. Welcome to our last lesson on fixed asset. I hope that this will be one of the best lessons that you have ever had. Now, we are going to continue with the question paper that we have been busy with over the last 6 months. Now, remember I said that when you prepare for your examinations, you need to make sure that you at least try the last 5 question papers from the last 5 years. So we are busy with the 2023 one. Remember, we've also tried question papers from provinces like your Eastern Cape and so forth. So for this lesson, we are only going to be focusing on this one from Gauteng. Now here they're saying that this question consists of 30 marks and we should be able to do it in 24 minutes. So I hope that we'll be able to stick to that time. So here they're saying carrying value is the, remember this is the section whereby you have to indicate whether it's true or false, right? Now the first concept says that carrying value is the remaining value of an asset after it has been fully depreciated. So in this case, this answer here, it will be true because we know that carrying value of an asset after it has been fully depreciated, the lowest carrying value an asset can have, it's still 1. So that 1, we still call it a carrying value. Okay. Next, they're saying that gap makes it possible to compare financial results of different companies. This is true because remember, gap allows us to follow the same principles. What we follow in company A will also be followed in company B. Hence, it becomes easy for us to compare the performance of those different companies. Okay. Next, they're saying the materiality principle states that all incomes and expenses incurred must be shown for the same financial period. Now, this statement simply speaks about matching our incomes with our expenses. Now, you can already see that the statement will be false because it speaks about materiality. The correct principle is matching, so the correct answer here will be false. Next one, they are saying that accumulated depreciation is an expense. Now remember, accumulated depreciation, we don't regard it as an expense, we regard it as a negative asset. So this statement here will be false. And then the next one says that depreciation is a negative asset. Depreciation cannot be a negative asset because it is an expense. So therefore, this statement is false. Okay, so please make sure that you look at the keywords as you deal with the concept. Now here they're saying we are going to do the fixed asset note. This note, guys, is very important. It consists around 20-25 marks. So you need to make sure that you are able to calculate what the examiner will require from you. Okay. Now here they're saying the name of the business is Goody Shoe Traders. You are provided with the following information from the records of Goody Shoes Traders. The financial year end is 31 December 2023. Very important for us to know that our year will start on 1 January 2023 and then end on 31 December 2023. Number 1, they say we must calculate the total depreciation on equipment for the year ended 31 December 2023. Now, here's what you need to remember. Remember, guys, when we do depreciation, I said you need to look for sun. Sometimes you'll find out that one of them is not there. So if it's not there, deal with what you are given. Okay. So the information here that we need is regarding depreciation. So here they're saying in terms of equipment, they're saying that new equipment with a cost price of 120,000 was purchased on 1 October 2023 and then no entries have been made. So now, in order for us to be able to save time, this is what we need to do. We need to check, guys, what are we expected to calculate. If you look at this, we are also expected to do the fixed asset note using the same information. So when you do this, guys, you must be very smart. You must be time conscious. When you read about a transaction, immediately record the information. So now remember here they told us there was a new equipment that was bought, but this was not recorded. So it means that these will be our opening figures. Hence, when you look at this, our equipment at the beginning is 810,000. So what I will normally do when I see this, I'm going to record that addition of new equipment. Remember, this will help me to do my depreciation, right? So under additions on equipment, I'm going to record that 150,000. Remember, we are looking for ways where you can earn marks. So this one will need to come back so that we can calculate depreciation. I just noticed that on the fixed assets, they have made you to look for carrying values. So what you can do, you can just look for them immediately so that you can earn marks. So if we say 2,680,000 and then we subtract 1,060,000, we are going to get 1,620,000. So we're going to get our carrying value as 1,620,000. I'm going to confirm 2,680,000 minus 1,060,000. It gives us 1,620,000. And then for our equipment, we are going to say 810,000 minus 240,000. By doing this, a learner has already earned marks. Our carrying value at the beginning is 570,000. So at least you have 3 marks for now, rather than getting 0. Okay. So now let's go back to our information. Here they're saying that equipment is depreciated at 20% per annum using the cost price method. Now remember, our year starts in January, and then they said we bought new equipment in October. So it means this equipment will be with us for October, November, December, January. Oh, sorry, it will be with us for only the remaining period of from the 1st of October up until December. So it will be October, November, December. So it was with us for only 3 months. And then remember that edition, guys, I made a mistake. It's 120,000. So we are going to correct here and put that 120,000. So please make sure that you also verify your information. So our edition at cost is 120,000. Now remember, we are depreciating this for 3 months. So when we do that for equipment, we are going to say for the new one, it's going to be 120,000 multiplied by our rate here is 20 over 100. So we multiply it by 20 divided by 100 and then multiply it by 3 over 12. We will see how much we are getting. Let's see here. So if we say 120,000 multiplied by 20 divided by 100 and then multiply by 3 divided by 12, it gives us 6,000. So it means the depreciation for the new equipment is 6,000. Remember, you are going to say 120,000 multiplied by 20 divided by 100 and then multiplied by 3 divided by 12. So it gives us 6,000. Unfortunately, I can't show you these calculations because I'm using a tablet, so I'm calculating on my phone. But for you, you will be able to use your calculator. Now, when it comes to old equipment, it's very important for you to check if there is a chance of you having a residual value. So now, remember, in terms of equipment, what is happening? They didn't tell us about any equipment being sold, and then when we check, the cost price of our equipment is 810,000, and then our accumulated depreciation is 240,000. So it means for us to do our depreciation of the old equipment, we are going to say 810,000 multiply by 20 over 100 and then multiply by 12 over 12, because this was with us for the entire year. So we are simply going to say 810,000 multiply by 20 divide by 100, which will give us 162,000. I hope this makes sense, guys. So it means we are going to say 810,000 multiply by 20%, yes, it's 162. Then 162,000 plus 6,000 will give you 168,000. So in our depreciation for the year for our equipment, we are going to insert that 168,000. Okay, guys. Now remember, under disposal, we did not sell anything, so we're going to put 0. Now, to get our cost price at the end, we are going to say 810,000 plus 120,000, which gives us a cost price of 930,000. And then from there, to get our accumulated depreciation, we're going to say 168,000 plus 240,000. Remember your accumulated depreciation at the beginning plus your depreciation for the year. So this gives us a total accumulated depreciation of 408,000. So I'm going to repeat it again. 240,000 plus 168,000, it will give us 408,000. Then we are going to say 930,000 minus 408,000, it gives us 522,000. I hope this makes sense, guys. Now once we are done with this, uh, we move to our vehicle, because in terms of equipment we are already done. So let's go to our vehicle. In terms of vehicles, they are saying that one of the delivery vehicles was sold for 190,000 on 1 July 2023, and they are saying that the vehicle was purchased on 1 July 2021 for 320,000. Now in terms of this information, what is important is that we need to go back to our information and try to calculate. If you look at the answer book that they gave us here, they gave you information about that vehicle that they're talking about, right? Remember, at the beginning, the depreciation, because they said you bought it on, I'm gonna show you something. They said you bought it on the 1st of July. It means it was with you from July, August, September, October, November, December. So it was with you only for 6 months. Hence, if you take this 320,000, you multiply by 10 over 100. Remember, depreciation, they are using diminishing balance method. So if you say 320,000, you say multiply by 10 divide by 100, and then multiply by 6 divide by 12. It will give you this 16,000 that we have here. So it means the carrying value at the end, it will be 320,000 minus 16,000, which gives us 304,000. Okay, very important for us to make sure that we get this right. Now in the second year, in the year that ended 31 December, remember this vehicle will be with us for the entire year. This calculation part, I don't know what do they, or they want you to show how you are going to do this calculation here, but I suggest you only show the part where you calculate depreciation on the carrying value. But also here they showed you how okay, it's fine, you can only show the last year here. Okay, so now to do our current depreciation, it means we are going to calculate on this carrying value, because they are using diminishing balance method. So it means we are going to say okay, I'm not going to use this part because I don't have enough space. So I'm going to continue on. Remember, we have year one. I will do my year two. Okay. This calculation here, I'll show it underneath so that they don't penalize me for marks. So I'll do the calculation for myself here. I am the boss. They must listen to me. So on year two, my calculation for depreciation, I'm going to do it like this. I can say, remember we're calculating on the carrying value. So we will say 304,000 multiply by 10 over 100 multiply by 12 over 12. It will give us the depreciation for the current year. So it means we're going to say 30400 multiply by 10 divide by 100, and then we multiply it by 12 divide by 12, which will give us a depreciation of 30,400. Now if we say 30,400 plus 16,000, it will give us accumulated depreciation of 46,400. Okay, guys. Now to get our carrying value, we are going to say 320,000 minus 46,400, which is our accumulated depreciation to date, which gives us 273,600. Okay, remember the calculation here. We said we got 30,400. Now in year three, where we are selling, which is the current, on the 1st of July, they said we are going to sell it on the 1st of July. If you check it, remember they said it was sold for 190,000 on the 1st of July. So it means it will be with us from, I want to show you the months, it will be with us from January, February, March, April, May, June. So for July, we will not calculate that entire month, because that vehicle would have been with us for a period of 6 months. Remember, it's January, February, March, April, May, June, because we sold it on the 1st of July, so we can calculate July. So it means we will take our carrying value. We're going to say 273,600 multiply by 10 over 100 and then multiply by 6 over 12. Okay, so we will say so this is the part where they want you to calculate the last year for that sold vehicle. So that's the part we're going to also record here. So on the sold one, you will say 273,600 multiply by 10 over 100 and then multiply by 6 over 12. Remember the depreciation for the sold vehicle that they want here. That's the amount that we're going to put there. So 273,600 multiply by 10 divide by 100 and then multiply by 6 divide by 12. It gives us 13,000 let me see, 13,608. So that 13,608, we will put it here as our depreciation, and then also remember we must record it here that the amount was 13,608. I hope this makes sense, guys. Now from there, moving forward, what we are going to do, we are going to get our accumulated depreciation. Now remember, 46,400 plus 13,680 gives us 60,008. Now if we say 320,000 minus 60,008, it gives us 259,920. So it means that our disposal at carrying value on our vehicles, our disposal is going to be 259,920. I hope this makes sense, guys. So this is the disposal at carrying value. So when we disposed it, is total accumulated depreciation according to our information. Oh, sorry, this is the carrying value, right? So when we disposed it, the accumulated depreciation was 60,008. So we need to be very careful when it comes to this. I'll show you the shortcut in terms of how to do it. Now, when you calculate the old, guys, it's very important for you to make sure that you get rid of the one that was sold. Now, when you check our vehicles when we started, they amounted to 2,608,000. Remember, in this 2,000,000 680, it includes the one that we sold, so we need to take it out. So to calculate our depreciation, we're going to say 2,680,000 minus 320,000. Remember, we need to deal with the cost price, right? So this is the cost price first. So 2,680,000 minus 320,000, it gives us 2,360,000. Now when we look at our accumulated depreciation, remember we must also subtract the depreciation of the one that was sold. So it is 1,060,000, right? Now on the old ones, remember they include that one that we sold. So if we say 1,060,000 and then we minus the accumulated depreciation of that old one at the beginning, remember this is at the end of the year, so at the beginning it was 46,400. So if we minus that 46,400, it will tell us how much we should have. So if we say 1,060,000 minus 46,400, it gives us 1,013,600. So our carrying value will be 2,360,000 minus 1,013,600. Let's see how much we're getting. So 2,360,000 minus 1,013,600. It gives us 1,346,400. So when we calculate our depreciation, we are going to say for the old, we are going to say 1 million. I'm going to bring it here so that you can see it. We're going to say 1,346,400 multiplied by 10 over 100 multiplied by 12 over 12. Let's see. So if we say 1,346,400 minus multiply by 10 divided by 100 and then multiply by 12 divided by 12, it gives us 134,640. Okay, so our total depreciation for the year will be 13,680 plus 134,640, which gives us 148,320. So that 148,320 will bring it here, 148,320. Now remember, our cost price, we don't have any addition at cost. They didn't say anything about us buying a new vehicle. So obviously if we say we know that our cost price after we sold that one, we are going to be left with, I think we calculated it somewhere, we're going to be left with 2,360,000, right? So our cost price at the end, it will be 2,360,000. Our accumulated depreciation, for us to get the accumulated depreciation at the end, we are going to say 1,060,000 plus the total depreciation for the year, which is 148,320. We minus the total accumulated depreciation of the sold asset, which is 60,008. So we will subtract that 60,008, and then it will give us the accumulated depreciation at the end. So let's see, 1,060,000 plus 148,320. Then we subtract 60,080. We are left with accumulated depreciation of 1,148,240. So to get our carrying value at the end, we would say 2,360,000 minus 1,148,240. Now our carrying value according to this is 1,211,760. Guys, I hope that this lesson has helped you. We are done with this lesson and we have only spent around 23 minutes, I think. If you need help, you can contact me on 073 036 3208. And remember, our lessons are from 500. This includes 8 lessons that are live. Okay, thank you so much guys for watching. All the best with your paper one. God bless you. Shalom.